Your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, June 17th, 2015. Euro dollar. So we're still locked in some sideways consolidation in the euro, and it's going to need to see a break above 1467 or back below 108.19 for clearer directional insight. At this point, if we do see a break above 1467, this could open the door for a more significant correction in the euro up towards the 120 area, while a break back below 108.20 would open the door for a resumption of declines down towards a retest of the 12-year low set in March at 104.62. For today, short-term levels to watch above and below come in by 13.86 above, and looking below, you're looking at a support around 11.50. Sterling dollar. So cable has managed a nice recovery over the past several sessions out from 51.70, with gains now trading back above 156 in recent trade. There is a 78.6 fib retracement off of the recent 58.15 to 151.70 high-low move, which comes in around the 156.75 area that could cap additional rallies. However, a break above 56.75 would open the door for a more immediate 100% retracement of that move up towards the 2015 high at 58.15. At this point, a break and close back below Tuesday's low at 155.40 would be required to put the pressure back on the downside. Dollar yen. So dollar yen continues to trade within a sideways consolidation following that correction off of the multi-year high that we saw the other week at 125.85, and the overall structure remains highly constructive, with the market seen back above that 25.85 high. However, at this point there is still room for additional corrective activity back towards previous resistance in that breakout area at 122. So right now it's a bit of a locked in holding pattern situation and waiting for clearer directional insight with dollar yen. Euro Swiss. So Euro Swiss continues to try and attempt to recovery out from lows that we saw earlier this year in the 102 area, and the market needs to break back above 105.75 to confirm additional upside towards the 108.15 February peak. It looks like a higher low is in the process of carving out around 104, and this should be confirmed on that break above 105.75. Really only a close below 104 would delay the current recovery outlook. Aussie dollar. So Aussie remains locked within an intense medium-term downtrend, and the market is seen consolidating below recent highs at 78.19, 78.20, ahead of what should be the next downside extension below that multi-year low that was set earlier this year at 75.33. Really, only a close back above 78.19 would delay, though a market would be required to break back above the high that we saw going back to the 14th of May, which comes in at 81.63, to negate the current bearish outlook. Dollar CAD. So dollar CAD looks to have finally carved out a higher low around the 122 area, just above 122, ahead of what should be the next upside extension back above recent highs in the 125.65 area and towards the retest of the 2015 peak at 28.35 further up. At this point, only a daily close below 122 would delay the outlook, but it wouldn't negate it, and a break back above recent lows that we saw all the way back down around 119.20 would be required to take the immediate pressure off the top side in dollar CAD. Kiwi dollar. So Kiwi continues to trade just off multi-year lows and multi-month lows that were set the other week at 69.42, and deeper setbacks are favored below 69.42 as the market continues down towards next key psychological barriers in the 65 area. At this point, any rallies are classified as corrective, with the market now expected to hold below that recent high that we saw at 72.32 going back to the 10th of June. SPX 500. So the S&P 500 saw a bit of a rebound in Tuesday trade, though the market overall continues to show signs of the formation of a major top after establishing record highs in May at 21.37. At this point, a break below the low that we saw going back to the 11th of March at 20.40 would be required to confirm this topish outlook and accelerate declines. Gold. So although we've seen some setbacks in recent trade in gold, the market continues to hold above critical internal support at 1170 on a daily close basis. If the market continues to hold above 1170, this will increase the prospect for the market to return back towards key resistance at 1232, above which opens the door for a move beyond 1300. However, inability to hold above 1170 and a daily close below 1170 would open the door for an acceleration of declines and expose a retest of that critical base from 2014 at 1131.